Hi, everyone. It's Sunday, June 3rd, 2012. I'm Rob Booker. I'm here with Scott Welsh, and this is the Bossilator Sunday night webinar. Hi, Scott.
Hi there, how are you?
Excellent day. I got really excited this afternoon when I saw how overextended a bunch of currency pairs are, and I thought, if you don't mind, we might start off identifying and looking at how far crazed out some of these currency pairs are.
That sounds like a great idea. Let's do it.
It leads us naturally also into a discussion about profit targets, which I think could be very exciting as well. So I hope everybody is ready to have a great discussion about profit targets. And I think we've both had this on our minds. If you've been wondering what the heck happened on non-farm payroll report day, we're going to spend some time today also discussing why the euro went up risk on, it seems, after a disappointing economic number, and how any number could have reversed the current euro trend. And we'll also look at slingshot trades together with Scott. I want to start things off, though, as I mentioned at the beginning, with this euro-yen chart. Scott, it's got a reading of 996 on the 5-minute chart. That means that we've been away from the 800-period simple moving average for almost 1,000 bars. And if you're new to the Bossilator or coming back to it after some time away, this is exactly what we're looking for. And we have planned some really good trades in our Sunday night webinars together, and I'm sensing that this is one of them coming on here, Scott. There's a fundamental problem with this trade, however. Would you mind maybe sharing with everybody what that problem is?
Well, there's not enough space there for me. That's the only problem. But I'd love the number, and I would love to get involved in it. Could it maybe drop a little bit more for me?
Yeah, okay, here we go. The number is fantastic. What this number denotes is overextension, that the trend downward has gone on for so long that we're looking for a move upward in the euro-yen. We're looking for a retracement back up to the 800-period simple moving average. That's what the Bossilator does. It tells us when a trend has gone on for so long that we could expect a reversal. Well, there's a major problem with this, as Scott mentioned. There's not enough space to take a trade. What Scott means by that is if we bought right now expecting it to go up to the 800-period simple moving average, we would have a profit target of approximately, I don't know. It's actually more than it looks like. It's probably something along the lines, Scott, of probably 40 pips, and that's not a bad profit target, actually.
No, not at all.
It's actually pretty good. But yeah, if you compare the distance that it has to cover toward the 800-period simple moving average with the lows that it has made recently on Friday, well, then we have a problem. That stop loss of over 100 points or 200 points and a profit target of 43, well, that just doesn't make sense. And we're going to have, I think, a lively discussion about what profit targets are made of and what's important when looking at profit targets later on this evening. But to start things off, this is a no trade for us because we just don't have enough space here in order to justify a trade. Not every good setup is actually a good investment or a good trade. It led me to think something that we don't talk about often enough, and that is, well, what's happening on the higher time frame charts? Some of the greatest Bossilator trades I've ever taken in my life have occurred when multiple time frames were overextended simultaneously. Well, I took a look at the 1-hour chart on the Bossilator this evening, and found this. This is the 1-hour chart, and we are 619 pips away from the 800.
Yikes.
Now we're talking.
We're talking.
This is the good stuff. This is nice. This is what we want to see. This is what we live to see, and this is exactly what we're looking for. The 5-minute chart shows no further trade opportunity, but the 1-hour chart, to much the contrary, shows that we have a lot of room up to the 800-period simple moving average, and we've gone 1,036 bars in the trend. Now we're talking about enough space that would justify a trade opportunity. What are some ways, Scott, that you might look to set up a trade on this 1-hour chart?
A couple of different things that I've done in the past are draw a trend line, which I love. We could draw a trend line, and normally I'd want to be nice and steep In this situation, I think I'd continue to feel that way, only
Mm-hmm.
because the
Yeah.
Bossilator rating is so high
Yeah.
in the thousands.
Right.
So that would be one way I'd be interested. Another way, if it was anywhere near just a 800 period Bollinger Band in extremity, I kind of like trading off of Bollinger Bands too.
So I
Those
could
are
put a
two simple
so I
ways.
could put up some Bollinger Bands right here, if you don't mind.
Yes, please. I'd love to see them.
800 period Bollinger Band, 2 standard deviations, real thick. So we are below the bottom Bollinger Band on this 1 hour chart.
Well, I mean, you're giving me reasons, or you're not giving me many reasons to pass. You keep twisting my arm, you're going to break it, I think.
Okay, so we've broken a non-steep trend line. We do prefer steep trend lines, but we did also break. To be fair, we broke steep trend lines as well. We just broke them earlier, so we missed that entry, perhaps. You were just about to mention before I rudely interrupted, perhaps another method of entering a trade like this.
Well, looking at your chart, the cloud is a real nice entry. So there's an obvious one that we're looking at in front.
Yeah.
But there's another way to enter, and for me personally, in the trades that I'm taking these days, I combine a few things. I combine a smaller Bollinger Band to get extreme readings, volatility readings on a shorter space, and then I add stochastic on top of that, and then I add a trend line or PSAR on top of all of that.
Wow.
And then I get my entry. Jeez,
Okay.
that's a
Now,
lot.
while I'm here talking about the cloud, which is you've led me perfectly into that conversation, you could on your charts set up the euro yen 1 hour chart and maybe help us take a look at what you might
Sure.
look at for the trade, and I'll talk about the cloud. There's a unique opportunity here, everyone, and we don't get one every Sunday night, but this is one of the Sunday nights where we get it. And there are a few concepts that are very important to boss leader trading, especially when we're talking about the big opportunities. And this is one of those times that we're talking about the big opportunities. And what I mean by that is there's a lot of space between where we are right now on price and the 800 period simple moving average. Big opportunity means lots of planning and careful trades, quick stop outs, and big profit targets. This is the type of thing that a boss leader trade lives for. It's the reason we're doing the webinar series at all, and it's the reason we keep doing these Sunday night webinars, is that I find just extraordinarily good trades at this time. Here's what I would look for, and it's not exactly the same thing that everybody else in the world might look for. The cloud comes into play, and it helps us a great deal. What I need to see on the cloud is, instead of the cloud thickening, I need to see the cloud thinning out. And one really nice thing about these settings that we have on the Ichimoku cloud, and we'll talk about what those settings are, and you can watch a free webinar that I held about the cloud to get more information about it. One thing that I like a lot about it is it extends out further than the candles themselves, thus giving us a picture of what it looks like into the future. Some of the very best cloud trades, which I'll talk about in a moment, come when the cloud is at its thinnest point, not when it's at its thickest point. Breaks below the cloud, for example, up here at the top when this giant trend began, happened when the cloud was very thin. In fact, you can see it here. It thinned out so far there was almost no cloud at all, and it went from thick to thin, and that's when the big move happened. Now, there's lots of examples of this, and we're not going to teach an entire session about the cloud tonight because we don't need to. This simple concept is enough. What we want right now is for, even if this goes up, we don't really want to take this trade. We don't really want to be in this trade at these prices. What we would prefer to see happen, actually, is the currency pair continue to fall and create even more space between where we are right now and the 800 period simple moving average. We'd like to see price move further to the right. Now, we're following the non-farm payroll report, so it's likely that price will sort of smooth out and go sideways a bit. Most Mondays after the non-farm payroll report result in such movement. And we'd like to see this cloud become thinner and thinner and flatten out and go sideways and maybe even upward a little bit. And then we'd like to see a break above this cloud. Now, this is a multi-stage process for testing, planning, and taking trades. And this is the third concept of boss leader trading that I want to mention. we oftentimes, as I mentioned earlier, get a really big opportunity like we do now. We get anxious to take it, and we can get stopped out a whole lot if we don't take our time and plan them very carefully. This is the third element of planning it carefully. We're going to wait and not touch this pair, at least I'm not going to, until we go sideways further. We may even jump up a whole bunch and miss it. That's fine with me. We're going to see if we can go sideways or down further. See this cloud thin out a bit. Price goes sideways and jump up above that cloud over here to the right. Now that's going to take at least, at the very least, that's going to require, let's see here, 55 to 60 trading hours. Let's just say 3 days. That's going to take us into Tuesday evening, Wednesday morning before this trade could fire off. It's just not going to happen before that. Now, it could happen before that, and I would most likely pass on the trade. Here's what it will look like. Price could move sideways to the right, or down to the right, or just slightly upward to the right over the course of the next 50 hours of trading, and then pop up above these clouds and close with a full candle closing. The body of the candle needs to close above the cloud. That's a buy trade, as long as the cloud has thinned out at that time. If we break above the cloud here or here or here, these are not thinning out. This is not a cloud thinning out. This is a cloud thickening and growing wider. That means that there's a whole lot more ground to cover before we can get through this barrier. That's what this is. This is a barrier protecting us from starting an upward trend. And everyone here is familiar with the concept that in order for a trend to end, it needs to slow down and reverse and get a little bit choppy. And that's exactly what we're going to look for. We're going to wait for it to slow down, get a little bit choppy, go sideways. Trend traders and counter trend traders alike are going to get really frustrated this week as they're waiting for they're expecting a continuation move and whatnot. If it falls another 300 pips, that's perfectly fine with us. We don't care how far down it goes. If it jumps up, we're going to consider it a false move. We're actually going to consider it a completely false move. It might not be, but we're going to consider it one. We're not going to believe it. We're not going to trust it, and we're going to wait. We're going to wait for it to drop back down below the cloud, and we're going to wait. Now, this is exactly what happens, excuse me, before the big downward trend happens earlier. A while back, we tried to break down below the light-colored cloud and couldn't quite make it. It was a false move. The cloud's too thick. It wasn't thinning out at that time. It was expanding. But then suddenly and very quickly, without a lot of retracement, the cloud gets very thin very fast, and that's exactly what we're looking for. We want to see the reverse of that happen over here to the right. We want to see that happen, and then I'm going to be ready to buy this currency pair. I won't be ready to do that until that time. Now, we could have Japanese intervention. We could have Facebook announce that it's got 10 billion users by annexing the Andromeda galaxy. We can have any number of things happen, and I'm not going to trust it. I'm not going to go forward with it, and I'm going to avoid it until I see that those factors come into play. Now, it brings up the question, what are my settings on the cloud? And here they are. My settings on the cloud are 18, 52, and 104. If you have the Ichimoku Cloud available to you on your charting platform, and most people do, you would set your Ichimoku Cloud settings to 18, 52, and 104 and get rid of all the extra lines and just leave the clouds. I did that by making the color transparent on all of the colors except for the cloud colors. Scott, that's a whole lot of talk about just one trade. But when this does fire off, it's going to be big. And as everyone who's ever traded against the trend knows, you don't want to do it too early. And this is a way to get us to wait so we don't take the trade.
Yeah, absolutely. On these counter trend trades, I would love to wait as long as possible. I mean, just wait and wait and wait, especially if I were doing it discretionarily. I would wait and wait. I would try to find reasons because we know we're going to get an upward move. Just don't get twitchy because what happens is you might get stopped out too soon. You get tired, you get exhausted, you get frustrated, and then you don't take the big moves. So I like it. I like the thick cloud there. That might even be a defense in itself, like it was for the red cloud before. Because it's so thick, it may not even get through.
Yeah.
So you got that to try to help you out. But, yeah, if it could just go sideways here from a discretionary standpoint, That's what I would be doing. For sure.
Yeah, and there's lots of things you can do. What are some things that traders can do, Scott, while they wait for this to happen?
The best thing that I do when I'm waiting is to not look at it at all. That's the bet, to plan other trades, to walk around the park and look at owls.
Walk around the park and look at owls.
Yes.
That's the best thing I heard all day. It's nice to see everyone here. Hi, Kevin. It's great to see you here. Kevin suggested watching a movie. Thank you for the well wishes on the Friday trade. We had a great trade on the non-farm payroll report. What a great webinar that was. We had a great time with everybody. I'm sure that most of you were there. And it was great to see your names there, and it's great to see you here tonight as well. So that's one way to trade the euro yen. It's absolutely positively going to be a trade that I take within the next 7 trading days. I can't know for sure exactly when it's going to happen, but it is going to happen eventually, and I don't want to take it early. I don't want to take it when the cloud's expanding. I want to take it when the cloud's thinning up, and when it does fire off, it's going to be a substantial trade. It will be a big trade. But just to pause here for a moment before I launch into what the fundamental story will be, I want to ask, Scott, are you ready to look at this trade from your perspective and give us an idea of what you might do?
I can tell you what the evil robot would do, yes.
The evil robot. That's great.
Yeah. Yes. Hal, you're not supposed to take this trade. Hal.
We interrupt this program with a technical difficulty.
Can you see it?
I can see it, and I love it. I love those TradeStation charts, Scott. I just love them.
Yeah, they're nice looking. MT4's good, but I like TradeStation better, that's for sure. But that's personal preference. What the robot would say, and we've talked about, I did the webinar when you couldn't make it, and we compared counter trend to breakout to just basic trend. I mean, we did all that, and we showed that counter trend is absolutely 100% profitable. But there's 2 problems with it. Number 1 is you have to have huge profit targets. Number 2 is the winning percentage is low. That all being said, if we were taking this trade on the Euro-Yen 60-minute chart, what I would be looking for in my trading is, here is just the basic 20-period Bollinger Band. It comes standard out of the box, whatever. I would want price to come down and bounce off the Bollinger Band. Why do I want to do that? Because I've looked at a lot of charts, and I've traded a lot of charts that when it bounces off the Bollinger Band, it goes to the upper Bollinger Band. As you can see, it did that not too long ago. So that's the first thing I would look for. And when I say I mean the robot. So the robot looks for the Bollinger Band there. Second thing, but that's not enough, but that's not all. To offer,
but
more.
Wait, there's more.
But wait, there's more. I love stochastic. I've always felt like, I just like the eye. It looks good to my eye. When it goes to oversold, it tends to move. So I thought, well, let's combine a Bollinger Band touch and combine that with stochastic to get an explosion move.
That's so delicious.
But wait, there's more. Not only is it off the Bollinger Band and stochastic oversold, I want one more trigger. And first it was just trend lines. But the robot didn't like to draw trend lines. It had a hard time taking trades automatically with trend lines. And that's really the only reason. I'd prefer probably trend line. But the PSAR operates almost exactly like a trend line. So the third and final thing I look for to get in this trade is touch the Bollinger Band. Stochastic must be oversold. And then a PSAR must switch. It must break through the upper little Pac-Man dots here, which it does on this bar right here. So we've got
the hippo pellets.
See, the little pellets. It's broken out of stochastic. We have a Bollinger Band touch. There's a PSAR. I would be, again, the robot would be in this trade. I'd have to test this pair to get a numerical, mathematically relevant stop, which would probably be fairly large on a 60-minute chart, somewhere down here. And my target would be at least the 800 simple moving average, maybe even higher.
How much do those pellets cost by the bushel?
Well, you have to buy them in crates. And if you buy them in crates, they cost $5 a crate if you go down the local market. That's true.
Do you have to buy them and then load them into your computer so that TradeStation can use them? And have you ever run out of these pellets?
No, I haven't run out because I actually got an automatic ship. But if you take the pellets, they come in little cases. You stick them in your slide drive, your disk drive, and it goes right in. It's really pretty easy. They're made for those now, so it's pretty easy.
I don't know why I'm in such a goofy mood. That's really good. But, Scotty, can the robot slice an apple? That's what Kevin asks.
I'm not trying. As soon as we're done with the webinar, I'll check it out. We'll see.
But wait, there's more. If you order now, we will throw in the pound Swiss at no extra charge. I'm looking now at my radar, and I'm showing that the Aussie yen is similarly overextended on the 1 hour. But even more so, I'm showing, and I don't know if it's accurate, that the pound dollar perhaps could be overextended on the 5 and 15 minutes. Do you mind taking a look at that with your TradeStation awesomeness? Because the Aussie yen's going to look exactly like the Euro yen did.
It's going to look the same? All right. Then, I'm sorry, pound dollar?
Pound dollar, 15 minute. Why not?
Okay.
Now, as you look up that currency pair, I'll take just a moment, 2 minutes at the most, and talk briefly about why waiting is an idea worth considering, in addition to the technical arguments that have been made already. In order for the euro yen to go up, that's risk on. In order for risk on to be the theme in the market, we need a number of things to begin to happen. We need jobs numbers that are going to be extraordinary, something above 150 on average, 150,000 on average, repeatedly. We're going to need to see oil prices go significantly lower, and they're going to creep back up if the economy heats up, but that's fine. We're going to need to see home prices improve, and we're going to need to see an uptick in inflation. We're going to need to see all those things happen. We're going to need to see the stock market improve considerably. It's now down for the year. None of those things are occurring right now, and that's a big deal. All of those things cannot happen by Tuesday. There's a lot of stuff that needs to happen in order for the euro yen to go up. And I had a question that came in a few days ago, and someone said, well, what about intervention? Well, the Japanese aren't going to get this all the way back up to the 800. This isn't the Swiss National Bank, which, when they intervene, they force a currency pair up 1,000 pips. That's not going to happen with the Japanese. When the Ministry of Finance dips into their reserves and buys a bunch of euros and sells a bunch of yen, or buys a bunch of dollars and sells a bunch of yen, they're not going to force it up that far. They're going to take it 70 to 80 to 90 to 100 pips, unless something really crazy happens that we couldn't quite predict, and of course that can happen. So we need a fundamental shift in the world economy to the upside. We need problems in Europe to dissipate. We need the stock market to improve and the job market to improve. That's a lot of stuff that we need to see improving before we can see this currency pair go up all the way to the 800 period simple moving average. We could see intervention or one positive economic number briefly released take it up 100 pips or 150, and that's enough to get to break even or even bank some profit. But to get the big score and the big trade, which we're talking about doing here, we need to see some fundamental numbers come out that are going to be really good. And we just don't have that yet. And so there's a fundamental argument for waiting a little bit longer before we jump into this trade. What do you see here on the 15-minute chart?
Probably, and the robot's not set for counter-trend trades, so that's why you don't see it having already taken this trade. I would say pretty recently, right around 5 a.m. on June 1st, Eastern Time, touched the Bollinger Band, stochastic went oversold, PSAR change right there, just as it's come out. I'd probably be in this trade with a stop loss down below, shooting for a humongous profit target. If you recall, our counter-trend profit targets were between 8 and 10 times our risk. I mean, they were just huge.
Right.
Which, as it turns out, I mean, we've got a little space there, but on the other trades especially, we had a huge amount of space. So,
yeah, we're 251 pips away from the 800 period simple moving average on the pound dollar.
Yeah, that's not. It looks like it's not that much, but yeah, look at that, 5,300, 5,500. Yeah, that's a long, long way. So
yeah,
a profit target up here would be very, very nice, and we'd be up, about 50 pips or so.
Right, 50 or 60. If I become the presenter for a moment, we can look at this from a cloud perspective. and then naturally move into a discussion of profit targets. And you so brilliantly brought it up yourself right here, and we're going to carry all these arguments one into the other, and I love it when that happens. You'll see here exactly what it is that we're looking for on the euro-yen. You'll see that the dark cloud was expanding here, and we couldn't break it. That's exactly the problem that the dark cloud presents for a counter-trend trader. If it's too thick, it represents a barrier. You could see that the price will bounce off a thick expanding, and it's more important that it's expanding rather than it's thick. It was thin here, but it was expanding, and that's the problem. It bounces off in both of those occasions. You could see now, though, that it quickly contracted. When the cloud quickly contracts, as it is in the case of the pound dollar on the 15-minute chart, as you see here on the screen in front of us right now, this is go time, and it is an important moment in the life of a counter-trend trader. If you missed the original entry, you could draw a trend line across the tops of these candles here, or you could wait for it to burst above the top of this dark or light cloud preferably, and a stop loss below the lows of the currency pair and a profit target at the 800. That is exactly what we want to see on the euro-yen, but we're not seeing yet. It's as if the euro-yen or all of the yen pairs just haven't quite caught up with the idea of the counter trend just yet. And that's natural. Some pairs follow others. Some pairs lead the way and are ready to turn around faster than others, and that's just the way it goes. And we've all been in the situation of picking the wrong pair on a reversal and felt like, oh man, I should have picked another one. This is a currency pair that it has a narrowing cloud, a great Bossilator reading of 1500. It's been away for 16 days on the 15-minute chart. That's way above average. 250 pips of possible and potential profit up to the 800 period simple moving average. And if it breaks that trend line and then we put a stop loss here, we're looking at a stop loss of 60 and a profit target of 240. And Scott, that's pretty close to exactly the kind of stop loss profit target risk to reward ratio that we're looking for.
Yeah, that's just about right. Yeah, you want it to be huge. For counter trend, you got to make it worth your while, because sometimes they can be tough to get in. So you got to make it worth your while with a huge target.
I was talking to Jennifer about profit targets. She's in the process now of finalizing the completion of the development of an expert advisor robot to trade her combo trade. And we're having lots of discussions about profit targets, and the discussions are fascinating, that the lower the profit target, the higher the win percentage. That if we choose a profit target of 4 pips on a trade, we're probably going to get 4 pips a lot, and our win percentage can go way up. The problem is our losses are going to be much larger than our wins, and so we could have 10 winners in a row and get 40 pips, and have 1 loss in a row and lose 30 or 40, and every time we lose, it's going to take 10 trades to get us back to where we were before. Now that's frustrating, but we could live with it if that were a profitable way to trade. Something that I think most traders find out when they try to develop an automated strategy is that it's much easier, never easy at all, but it's much easier to build a robot that trades your trading system that is profitable when you decide in advance that you're willing to accept a low win percentage in exchange for a really large profit target. And here's what I mean by that. We could very easily trade this pound dollar upward for 50 or 60 pips or 40 pips or 30 pips or 10 pips. We could probably very easily get a very high win percentage on this trade without an extraordinary amount of difficulty. We could probably do that, and it probably wouldn't be the most difficult thing in the world to do. But we're going to shoot ourselves in the foot, because a month into trading this, we're going to have a big loss. And Scott, people have big losses because sometimes the low where the stop loss has to go is far away, or sometimes they just make a mistake and they keep a losing trade open when they shouldn't. The big loss always comes. And oftentimes we'll choose to win frequently because we like the psychological feeling associated with winning. But Scott, you've discovered that big profit targets matter a lot when building an automated system that's going to trade every single chance that it gets.
Oh, that's an understatement and a half. I mean, I built my robot with a small profit target in mind. And that's what I had built. That was my original strategy. I was actually trading from the lower Bollinger Band that we saw earlier to the upper. That was how I started. and the winning percentage was phenomenal.
Like
It
80,
was like
90% probably.
yeah, it's mid-80s exactly, and it was for the year. It was not profitable. It was 80%, and I was so depressed because I manually tested it years back, and it just looked fantastic. And then when you put the cold hard facts on it, it absolutely didn't work. And after crying for several days, sitting in a dark room, flicking the light on and off, I decided just to go for higher profit targets, and everything changed. I mean, now it's hard to find something using the Bossilator that's not profitable, really. I mean, you can always find a way to make it a little bit profitable if you just have big targets.
Here's the progression that someone might go through. Step one, they enjoy the psychological benefits of trading for small profit targets and having a big win percentage. And then they experience a loss and they feel really decimated by it. I got a really sad Twitter message from somebody the other day, and they said, I can't come to TFL TV anymore. I left a losing trade open and I lost everything. I margin called my account. And I felt so bad for the person, and they'd gone through a couple of months of really positive reinforcement and happiness about their trading, and they were so excited. And we've all been down that road where one bad thing happens and it takes away all the good that we've done, and we feel like a failure, and that it's going to take us a long time to get back. And you can get back, actually, but it's hugely disappointing. And the whole time as we go down that road, we know it's coming. We can feel it in the back of our minds. And people will suggest to us, well, why not move your stop loss to break even and go for more profit? And we think about it for a moment, and we say, well, what if I miss the one big trade? Then the whole thing would go to crap. And the argument against the big profit targets are, well, if I miss the one great trade, then I don't get the profit, and then the whole system doesn't work. And here's my answer to that. This is the natural progression. The next step in that process is to do one of two things. It's to try to trade it in a discretionary fashion and miss it and be really disappointed, or to come around to the idea that you can have an assist. You can have an alert system or a fully automated methodology that will do it for you. Now, you don't need one or the other. You can do it just by being a discretionary trader that shows up for work during all the hours that you're supposed to be at work. That would be fine. That would also solve the problem. But I've found that the natural progression into trading for a living follows that path. Quick profits, because we want that psychological boost. We love banking that profit day after day after day after day. It makes us feel good. Leading to a big loss that feels distressing, and maybe even margin calls the account, and then we repeat the process over again. Leading to a realization that we need to extend our profit targets out and really latch on to the winners. When we hit it big, we need to hold on. And if you look at the successful people in the world of investing, they hold on for a long time onto what works. Warren Buffett holds on for a long time. I hate to use his name, but Donald Trump, when he rides a streak, he holds on for a long time onto what's working well. He might be a disagreeable, unlikable person, but he represents that same philosophy. Into the John Paulsons of the world, who will accept lots of losses in exchange for the big payoff down the road, and they hold on to the big payoff for a long time, all the way to Nassim Taleb, the author of The Black Swan and the founder of Universa, the hedge fund that simply loses money 364 days out of the year until it has a gigantic win when things get out of whack. In all of those cases, when you look at the survivability of investors, the big survivors, the guy that bought Sears, Eddie, what's-his-face, the guy that got kidnapped and had the idea to buy Sears or Kmart when he was kidnapped, and all that. All these people that have been value investors or been in the world of investing for a long time and have survived, they all share a common trait. When they find something that works, they latch onto it, they ride it for a long time, and we all can participate in that same thinking. However, it is reverse psychology, and it is extraordinarily difficult to do. Scott, it's not easy to hand over your system to a robot, but it's equally uneasy to trade in a discretionary fashion and hold on to a winner because you feel like you're cheating death, that you're making a mistake by holding on to your winning trades. It's very difficult.
Oh yeah, I mean losing's awful. Don't get me wrong, but if you really want to feel stress, get up big in a winning trade. I mean, you'll hear voices, and birds will talk to you, and People you know will say, why don't you take that out? Take it out, take it out, take it out. I mean, it's extremely hard. It's hard for me, which is why I say, take it out, robot. Whenever it's time, you take it out.
That's exactly right. And by handing it over to a computer, you don't close something early that should be allowed to run, or by alerting yourself to the opportunities, you're less likely to miss the trades that are the big ones. And I think that that's the natural progression where we allow ourselves to back off a bit, that we take our hands off the keyboard a bit, and we let some things like the alerts go off, and we're not planning every single trade or putting all the pieces of the puzzle together every single time. And so we feel less involved as a trader from one perspective, in the same way that Warren Buffett isn't trading stocks actively every day. He takes his finger off the wheel and lets the autopilot take care of itself a little bit. But then when you do put your hands on the wheel, that you mean to do business, and that you cut your losers off very quickly and you ride those winners for a very long time. And it's the philosophy of Bossilator trading, which I think is the philosophy of trading successfully in general, that when something is working, you really pile it on. You in business, you don't give up on things that are working. You don't ever do that. It's a philosophy of life. You don't give up on a relationship that's working. You don't give up on a job that's working. If you have a tennis player that you're working with, Scott, and they have a great serve and they have a great game, they play to their strengths, and they try to focus on that. And they don't change their game to match every opponent. They make their opponent change the game to match their strengths. And sometimes those strengths don't match up very well, and that's why people lose in tournaments even though they're focusing on their strengths. But in life, we don't win by changing our strategy every time we face a new opponent or a new trade. We have to consistently do best and really exert effort into what we do best. And that's extraordinarily difficult for a trader, because it's about freedom, and it's about decision making, and it's about putting the pieces of the puzzle together, and it's about deciding that we're going to be the captain of our own ship and all that kind of stuff. And Scott, really, we're not really the captain of our own ship. The system is the captain.
Right. The methodology, the process. Mm-hmm. You talk about just trusting the process, just trusting that what you do is high probability, and take the emotion out of it and take the analysis out of it and just do it. Do the process. This is your profit target, so that's your profit target.
Yeah, it's great. I think a question came in, and Vern says the master traders don't have fear of profits or losses. They just accept the risk and let the trade run its course. It's a great way to put it, Vern. Really appreciate that. Scott, would you mind taking a moment and updating us on some slingshot information?
I would love to.
What a great conversation about profits. I hope everybody enjoyed that as much as I did.
I wanted, what would you like to look at? You want to look at why waiting is better, meaning having more indicators and having the situation set up?
Why not? That's a theme that we've started tonight, and why not continue that theme?
That's what I thought you'd say.
So predictable.
This is a system we've looked at a couple different times. It is the reverse Bossilator. It's actually the methodology which is polar opposite to what we just talked about. Instead of waiting for the end of the trend and taking a huge profit, we're starting at the beginning of the trend, breaking out, as you see here, from the 800 simple moving average and taking it for a huge profit target. We've looked at it before, but what's interesting is that you talk about waiting and waiting and waiting. Waiting is even better on trend trades. Understand that the waiting we're talking about here is, remember we talked about three different things, three different scenarios have to play out. It has to touch the Bollinger Band, stochastic must confirm, and then the PSAR must fire off. What I thought is, well, when I first tested it, I got some good results and I got very excited. And then I took out one of my filters. In other words, I didn't wait as long, and I got so many more trades. I thought more trades equals more money. And I got very, very excited. Well, I'll show you what the truth is as far as waiting and being patient and then going for your target. I'll give you the numbers. This is the breakout with the target, and it's exactly as we said. Bollinger Band, stochastic, PSAR. And here are the numbers from October 2002 up until today. And what I did is a hypothetical $30,000, $40,000 account. You can see the profit here is $235,000 with our maximum drawdown of 20. So obviously you need an account That's a little bigger than 20. But I just did a typical 40, 50, 30, whatever. That's a lot. You can see that our profits are 10 times what our greatest drawdown is. That's pretty good. You can see your equity curve goes zoom straight up. Okay, that is the entries that we just talked about. Now, what happens if, for example, we do exactly the same system, but I don't worry about stochastic. I just want to rush in. I mean, this works so well. Why wait? Because you definitely miss trades. Make no mistake. There will be entries and trades that work, and you'll miss it because, oh, stochastic wasn't overbought or oversold. So, I mean, it didn't get in, but then it was a huge profit target. So here's the same strategy. All other settings the same, but no stochastic, meaning Bollinger Band and PSAR. No stochastic, don't worry about it. Here are the numbers. Equity curve is different, obviously. The numbers are 44,000. I mean, that's 220,000 profit over, what, a 9-year period, 8-year period, down to 44. I mean, that's mind-boggling. If you rush in, not only do you make a little less money, but you make a lot less money. And I thought, well, maybe that was just the bad one. Maybe I'll do it without the PSAR. Again, exact same settings, exact same system, and without the PSAR, a little bit better, but now it goes down to 62. So the combination of all three, in other words, patience, was what, 225, I think? Mm-hmm. And then you take one out, it goes to 44. You take the other one out, it goes down to 62. With the drawdown was all the same, so it's apples to apples. You can see it's much wilder. To me, that was really revolutionary to my way of thinking. I didn't think that was true. I wanted more trades, and I found out I was wrong. Just dead wrong.
Why do you think people want more trades?
More trades equals more money. I mean, I got to be active. I got to do something. Mm-hmm. I mean, why sit? I mean, I'm a trader. And what do you think about when you're a trader? You think about, I'm at a screen punching numbers, trading, right?
Yeah.
I mean, but in other words, make more trades. But truth is, take better trades and take them for long profit targets. And I had to learn through, literally hundreds of hours of testing and retesting and doing over and over again. And it just turned out every single time that the longer you wait, the more stringent you are, the less you trade. As long as you're still going for big profit targets, it just, again, doesn't work a little bit better. It works a ton better.
That's so awesome. I really appreciate it. Those comments are much appreciated. I hope everybody comes back to this webinar again and again and repeats it. I'll try to label it well inside of the archives. Anything else on as far as the waiting is concerned?
Well, I was also, as far as profit targets, and that's kind of the other topic that we talked about, waiting for a big profit target, so what does that mean? Well, if you read any of Michael Covell's, and I'll be honest, I don't like his books. I read them because I didn't have anything else to read, and I just like reading about trading, and I'll read something that I've already read. But he says emphatically, in loud letters and capital exclamation points, that you have to trade with the trend. You cannot have a profit target. You cannot have a profit target. Trend traders, the best ones, John Henry, Ed Seykota, all these people, you trade, and your profit target has to be whenever the trend comes to an end. So, in other words, what they do, and he even gave a couple samples of systems where you trade a certain scenario, and you trade it, you put a trailing stop, like 10 period ATR, like the average true range of an instrument, multiply it by 10, and then trail that stop. In other words, by trailing the stop after your entry, you get to go as far as you possibly can. And trend following, and these guys are all super traders, and I bought it years ago. But then when I started looking at charts, you give a lot back at the end.
Right.
Am I saying that clearly?
Yeah.
If you have 180 pip stop or 100 pip stop or whatever is best, it's going to go, and it's going to go 300 pips in your direction, and then it's going to come back 100 to get you out.
Right.
Well, why don't we have a target? I mean, why are we giving that back?
Right.
But the trend following books say you can't do that. You absolutely can't. It doesn't say maybe, it's up for discussion. He says you can't. So I took the exact same system, and this is the trend following system, the breakout system, but no target. And I did mathematical optimization for the last 10 years. So I found this is the best that this system can do. And all this did was, when it broke out, like the others, bounced off the Bollinger Band and took off, it immediately trailed the stop. And the best trail was 180 pips. So it trailed, if we're going short, and we took off at the 800, it would just go and go and go. And as you went, the stop would trail behind. If it went a million pips, minus 180, you'd be out, right? And so I just took all the same circumstances because Michael Covell told me to. And here are the results. Not awful, but half.
Wow.
So having a profit target is twice as profitable as not.
Can we do next week's webinar completely about this topic here? This is a fascinating topic.
Yeah. I just love it. I love taking what people say and seeing if it's true. And honestly, I'm not trying to blow sunshine. I mean, you introduced me to targets because this is what I believe. You know, when just the simple books that I was reading, you take it till it's over. You take it till the move is over. And you told me you trade with profit targets. And so that kind of changed me. And now here's the, I don't want to say irrefutable, but I don't know how you can refute mathematics. I mean, these are the numbers.
It either works or it doesn't. Yeah.
Yeah. This is fact. I mean, if you keep, as long as everything else is constant. So it works okay, but it's twice as bad.
It's fantastic. And we will spend next week's webinar talking about this exact subject here. This has been an extraordinary discussion, I believe, and we set up a euro-yen trade. We decided to wait before we take it. I hope we all do this together. I hope you're looking at it and following it and looking forward to that trade. We talked about big profit targets versus small ones, and starting off with the euro-yen trade and leading into the slingshot examples, we talked about waiting, and waiting is the hardest part, as Tom Petty would say, and it's also definitely worth it. I've recorded the webinar in crystal clear, semi-HD, standard definition, and am just thrilled that you were all here tonight. Had a great time. Scott, we will be back in a week,
yes.
And we'll continue this discussion of trend trading and targets versus no targets. Look forward to hearing from everybody and seeing you here next week. Scott, thank you so much for spending time on a Sunday night.
Thank you. See you.